Welcome to Simple Investing Secrets, your trusted source for uncovering the finest stocks to buy and discovering cutting-edge investment strategies to build enduring wealth. In today's engaging and informative video, we'll delve into an exciting analysis of not one, not 10, but a comprehensive selection of 15 meticulously researched and astutely chosen undervalued stocks that offer a unique and timely investment opportunity for those looking to make strategic financial moves in the current market landscape. We're also going to show you how you can get free stocks to add to your investment portfolio, so be sure to watch to the end. So before we begin, we kindly request that you like this video and subscribe to our channel for weekly updates. Let's get started. When considering undervalued dividend stocks, it's crucial to examine both the dividend yield and the overall financial well-being of the company. A high dividend yield may be attractive, but if the company is struggling financially, it may not be able to sustain the dividend in the long term. A discounted dividend stock is a stock that is trading at a price lower than what is considered to be its intrinsic value or its true worth. In other words, the market has undervalued the stock. This can happen for a number of different reasons, such as a company having temporary money problems or the market as a whole going down. One way to identify a discounted dividend stock is to look at its dividend yield. The dividend yield is the result of dividing the stock's share price by the annual dividend payment per share. A high dividend yield can be an indicator that a stock is undervalued, as the dividend payment per share is relatively high compared to the stock's price. Investors who are looking for income may be attracted to discounted dividend stocks, as they offer the potential for a high yield on their investment. However, it's important to note that a high dividend yield alone is not enough to make a stock a good investment. It's also important to consider the company's financial health, growth potential, and other factors before making an investment decision. Now let's take a closer look at our list of the 15 undervalued dividend stocks that could be valuable additions to your investment portfolio. Number 15. AT&T Incorporated, ticker, T. AT&T is a telecommunications company that provides wireless services, internet, and TV services to consumers and businesses. A few years ago, telecom giant AT&T was not the kind of stock you could buy and forget. The company's foray into the media business was turning into an expensive disaster, muddling the results of the core wireless business. AT&T has since shed its media assets, completing its transition back to a pure telecom company last year with the spin-off of Warner Media. The story is now dead simple: wireless and fiber internet. AT&T can focus its efforts and its resources on growing both businesses, and its ample cash flow generation fuels a solid dividend. The company has a dividend yield of around 7.4% and has a history of increasing its dividend each year. AT&T's stock price as of April 1, 2023, was $25.33. Number 14. Altria Group Incorporated, ticker, MO. Altria is a tobacco company that produces and sells cigarettes and other tobacco products. The company has a dividend yield of around 7.2% and has a long history of paying dividends to its shareholders. Altria's stock price as of April 1, 2023, was $46.14. Altria currently pays a 94-cent quarterly dividend per share. That amounts to a $3.76 payout for each share you own each year. If the payout stays the same for 10 years, you'll receive $37.60 in cash as compensation for holding Altria stock during that time. Number 13. Verizon Communications Incorporated, ticker, VZ. Verizon is a telecommunications company that provides wireless, internet, and TV services to consumers and businesses. If Verizon is successful in driving more customers to fixed wireless and streaming bundles, the company can grow the high-margin services business long-term even without adding net customers. Verizon has a dividend yield of around 4.3% and has a history of increasing its dividend each year. The company's stock price as of April 1, 2023, was $55.57. Number 12. ABBV Incorporated, ticker, ABBV. ABBV is a pharmaceutical company that develops and markets drugs for a variety of diseases and conditions. But by 2025, management is anticipating annual sales to return to a compound annual growth rate between 7% and 9%. ABBV is a fundamentally healthy business, and the stock appears to be a solid value. The company has a dividend yield of around 4.4% and has a history of increasing its dividend each year. ABBV's stock price as of April 1, 2023, was $113.88. ABBV has raised its payout for 51 consecutive years. And with the company's dividend payout ratio set to come in at approximately 53% in 2023, future dividend growth could persist. Number 11. Pfizer Incorporated, ticker, PFE. Pfizer is a drug company that makes and sells medicines for a wide range of illnesses and conditions. The company has a dividend yield of around 3.6% and a long history of paying dividends to its shareholders. Buying the stock today and taking advantage of its high dividend yield of almost 4% could be a great move for long-term investors. Pfizer's stock price as of April 1, 2023, was $47.72. Pfizer's shares are down by 20.3% in the last 12 months, and if you're willing to hold on to them for the long run, this stock is a great option for buying on the dip to gain a passive income stream. The stock's forward price to earnings ratio of 10.6 is well below the drug manufacturing industry's average of 13. The current stock price represents an opportunity for value investors to pick up shares of Pfizer before the market warms up to the stock. Number 10. Johnson & Johnson, ticker, JNJ. Johnson & Johnson is a healthcare company that produces and sells a wide range of healthcare products, including pharmaceuticals, medical devices, and consumer health products. The first thing investors should know about J&J is that more than 4/5 of its total revenue comes from sales of pharmaceuticals and medical technology. To better streamline its high-growth operations, the company plans to spin off its consumer business into a new company called Kenvue by the end of 2023. The company has a dividend yield of around 2.5% and has a history of increasing its dividend each year. Johnson & Johnson's stock price as of April 1, 2023, was $176.88. Number 9. IBM, ticker, IBM. IBM is a technology company that provides software, hardware, and consulting services to businesses and governments. The company's dividend has been a constant. Management has raised it for 27 consecutive years. From a cash standpoint, the dividend payout ratio has climbed over the past couple of years. The company has a dividend yield of around 4.5% and has a history of increasing its dividend each year. IBM's stock price as of April 1, 2023, was $132.49. Number 8. Coca-Cola Company, ticker, KO. Coca-Cola is a beverage company that produces and sells a wide range of soft drinks, juices, and other beverages. The company has a dividend yield of around 3.3% and has a long history of paying dividends to its shareholders. The Coca-Cola Company stock price as of April 1, 2023, was $58.87. Number 7. ExxonMobil Corporation, ticker, XOM. ExxonMobil is an energy company that produces and sells oil and gas products. The company has a dividend yield of around 5.9% and has a history of increasing its dividend each year. ExxonMobil's stock price as of April 1, 2023, was $64.20. Number 6. Procter & Gamble Company, ticker, PG. Procter & Gamble is a consumer goods company that produces and sells a wide range of products, including household cleaning products, personal care products, and food and beverage products. The company has a dividend yield of around 2.4% and has a history of increasing its dividend each year. Procter & Gamble's stock price as of April 1, 2023, was $142.19. Number 5. Walgreens Boots Alliance Incorporated, ticker, WBA. Walgreens is a pharmacy and retail company that operates a chain of drugstores in the United States and around the world. The company has a dividend yield of around 4.2% and has a history of increasing its dividend each year. Walgreens Boots Alliance's stock price as of April 1, 2023, was $56.41. Number 4. Chevron Corporation, ticker, CVX. The Chevron Corporation is an American multinational energy company that mostly works with oil and gas. Its headquarters are in San Ramon, California, and it operates in more than 180 countries. It is the second largest direct descendant of Standard Oil and was formerly known as the Standard Oil Company of California. The company has a dividend yield of around 5.2% and has a history of increasing its dividend each year. Chevron Corporation's stock price as of April 1, 2023, was $115.24. Number 3. General Electric Company, ticker, GE. General Electric is a diversified technology and manufacturing company that makes a wide range of things, such as aircraft engines, equipment for making power, and tools for imaging the inside of the body. The company has a dividend yield of around 0.3% and a history of paying dividends to its shareholders. General Electric's stock price as of April 1, 2023, was $106.62. Number 2. Merck & Company Incorporated, ticker, MRK. Merck is a drug company that makes and sells medicines for a wide range of conditions and diseases, such as cancer, diabetes, and infectious diseases. Merck has a presence in several therapeutic areas, but the company's oncology business is its most important. The key asset here is Keytruda, a cancer drug that has racked up numerous indications in the US and abroad. The company has a dividend yield of around 3.2% and has a history of increasing its dividend each year. Merck & Company's stock price as of April 1, 2023, was $88.16. The company's forward price-to-earnings ratio is about 14.8, compared to 14.2 for the pharmaceutical industry. Merck merits a premium given its prospects, which is why even at current levels, the stock remains worthwhile for long-term investors. Number 1. Cisco Systems Incorporated, ticker, CSCO. Cisco Systems is a technology company that provides networking hardware, software, and services to businesses and governments. The company has a dividend yield of around 2.6% and has a history of increasing its dividend each year. Cisco Systems stock price as of April 1, 2023, was $67.10. It's important to note that these stocks may not be appropriate for all investors, and it's important to do your own research and consult with a financial professional before making any investment decisions. Additionally, while a high dividend yield may be attractive, it's important to also consider the overall financial health of the company and the potential for long-term growth. There are several potential advantages to buying undervalued dividend stocks, including high yield. Getting a high return on your investment is one of the best reasons to buy discounted dividend stocks. This can be particularly attractive for investors who are looking for income, such as retirees. Potential for capital appreciation. Discounted dividend stocks may also have the potential for capital appreciation, or an increase in the stock price over time. If the company's finances get better or if the market gets better, the stock price may go up, giving investors a chance to make money. Diversification. Investing in discounted dividend stocks can also provide diversification for your portfolio. By investing in a variety of stocks across different sectors and industries, you can spread your risk and potentially reduce the impact of any one stock's performance on your overall portfolio. Potential for dividend growth. Many companies that pay dividends have a history of increasing their dividends over time. If you buy dividend stocks at a discount, you might be able to benefit from future dividend increases as the company's finances get better. Discounted valuation. When a stock is trading at a discount to its intrinsic value, it may present a buying opportunity for investors. If the stock price eventually rises to reflect the company's true worth, investors may benefit from potential gains. We'd like to thank Moomoo for sponsoring this video. And as a limited time special, Moomoo is offering up to 16 free stocks and a cash reward when you open a brokerage account through our special link. Moomoo will give you up to 16 free stocks plus a $50 cash reward, including one free share of Tesla or Expedia Group. So click on the link in the description to get your free stocks today. As is the case with any financial endeavor, the utmost importance lies in diligently conducting thorough research and analysis before making the decision to invest your hard-earned money, whether it's in purchasing stocks or venturing into the dynamic world of the market. By taking the time to truly understand the intricacies, potential risks, and anticipated rewards, you empower yourself with the knowledge needed to make well-informed and prudent choices that align with your financial goals and aspirations. This essential step ensures that you're equipped to navigate the ever-changing landscape of investments, fostering confidence in your decisions and ultimately leading you towards a more secure and prosperous financial future. Remember to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching, and best of luck with your investments.